Pay back the money, return the money, pay back the money. When will the victims see the light of day? Arrests are being made again. The People's Police protect the people. The People's Police protect the people.
这么大个银行说关门就关门了，这是中国农业银行长春总行关门呢，看看关门呢吧。
China's small and medium-sized banks are in the midst of an unprecedented crisis, with 40 small banks disappearing, being absorbed by larger banks, or dissolved in the week ending June 24th, according to information on the official website of China's State Financial Supervisory Administration, SFSA, on June 20th. Even at the height of the U.S. savings and loan crisis in the mid-1980s, the rate of bank failures was slower. At least 337 other banks have been officially classified as high-risk institutions, and some analysts say that the collapse of real estate, one of the pillars of China's economy, has been followed by an even bigger financial crisis. The smaller banks in China are bearing the brunt and facing a double crisis in savings and loans, S&L. The significant impact is sweeping across China's banking and financial system.
7天时间，40家银行消失。
In 7 days, 40 banks disappeared. On June 20th, Liaoning Rural Commercial Bank merged 36 small and medium-sized rural banks in Liaoning, 2 rural banks in Guangdong, and 2 rural banks in Zhejiang. There were also reports that smaller banks are undergoing heightened scrutiny to prevent the deterioration of the real estate debt crisis from spreading into credit risk. The China Financial Stability Report 2023, released by the central bank, showed that the number of high-risk banks reached 337, all small and medium-sized, mainly in the 3 eastern provinces, Gansu, Inner Mongolia, Henan, Shanxi, and other regions. Small and medium-sized banks may have become the most unstable factor in the banking system, with internal control risks and non-compliance risks, as well as poor risk tolerance, poor asset quality, and unpromising operating conditions. Real estate is also a contributing factor. For example, the Bank of Guizhou, which has been dragged down by the frequent blow-ups of significant clients of real estate enterprises, has a non-performing rate of real estate loans as high as 40%. The next few years will not be peaceful for the banking industry, so those who want to deposit money in a bank and buy bank financial products must be cautious and cautious again. Why is this happening? According to The Economist, China has seen several medium-sized banks fail since 2019, as well as solid investment management firms and state-owned financial enterprises. While China's government regulators have also been engaged in various difficult reforms and consolidations over the years, these efforts have yielded little success, especially with the most complex and problematic small rural banks. There are about 3,800 of these small banks in China's rural areas. With assets of 55 trillion yuan, or 7.5 trillion, or 13% of the entire banking system, these small banks have been long plagued by mismanagement and have made large loans to real estate developers and local governments. In recent years, some banks have been revealed to have 40% of non-performing loans on their books, and this figure is only a conservative estimate. The reality could be much worse. According to the China Financial Stability Report 2023, released by China's central bank, the number of high-risk banks in China now stands at 337, with total assets totaling 6.63 trillion yuan, or 910 billion, mainly among small and medium-sized banks. As Beijing's data is often skewed, the scope of high-risk banks may be much broader than the official figures. At the end of 2023, the non-performing loan balance of all commercial banks amounted to 3.22 trillion yuan, or 440 billion, and a significant portion of the 26 listed small and medium-sized banks had above-average non-performing ratios. Most alarmingly for officials, the failure of poor-performing small banks has threatened social stability. In 2022, 4 village banks in Henan province were involved in a 4.2 billion fraud, with about 600,000 people losing their deposits. The depositors flooded the streets to defend their rights and recover their life savings. Still, the Henan authorities cracked down on them in the name of counterterrorism, and many of the depositors were arrested, beaten up, and illegally detained, and have been under close surveillance for an extended period.
我们就查一下自己的钱在不在，给不给查，不要再骗我们出去了，我们不出去了。我查自己的钱怎么了？
I put the money in the formal bank, which is a formal deposit. Why can't I get it out? Where is the way of heaven?
事情还得从2020年的8月份说起。
It all started in August 2020 when thousands of depositors all over the country purchased a high interest rate deposit product from Henan Village Bank through an online marketing platform, which was later taken off the market. However, they continued to sell through the Village Bank's channels such as small programs and text messages. At first, the depositors could have regular access, but then the bank said the system upgraded to suspend service and it became difficult to withdraw money. Why would it explode? This is the first outrageous point I want to discuss. The criminal practice of stealing the sky for the sun. Let's put it like this. The bank executives and shareholders conspired with each other, using the process procedures in line with the provisions of the Banking and Insurance Commission to make a set of fake systems, with a third-party company to engage in a platform that does not enter the real accounts. It's a shocking revelation that a reliable bank was used as a guarantee, and a high interest rate deposit product as bait, only to have the deposit money sucked in and transferred to unregulated accounts. The feeling of safety that comes with depositing money in a bank is shattered when the money disappears. The 4 village banks in Henan province, all seemingly reliable, have the same shareholders behind them, the Henan Xinshai Fu Group. However, this group was cancelled as early as February 10, 2022, and the actual controller, Lu Yi, fled the country. What's more outrageous is that the nature of the incident was more confusing. After the outbreak of the incident, depositors from all over the country began to defend their rights collectively. However, the denial of these village banks, stating that the money did not go into the bank's account and was not an actual deposit, has left many depositors feeling a sense of injustice. According to the Deposit Insurance Ordinance, if the principal and interest of all deposit accounts of the same depositor in the same bank add up to 500,000 RMB, that is within $69,000, the insurance organization will pay out the total amount, while the part exceeding this amount can only wait for the bank to liquidate, and then pay out according to the proportion of the leftover amount. However, the money will not be protected if characterized as illegal absorption of public funds or high-interest wealth management. Then it will be very difficult to recover the principal. Henan Village Bank hurt more than 400,000 depositors and the entire financial industry, bringing a bad influence. You must realize that finance itself is a product of credit, and if it loses credit, it will collapse quickly, like dominoes.
牌一样迅速崩塌。
There is an even more unbelievable incident. In recent years, there have been all kinds of fraudulent practices within some banks. In June last year, a Chinese man surnamed Zhang, with a deep trust in the bank, deposited 4.1 million RMB, equivalent to 570,000 US dollars, into a bank. However, only 180,000 RMB, comparable to 25,000, is left after maturity. The video shows that Mr. Zhang's house was demolished, and he chose to receive monetary compensation, a considerable sum of 570,000 at once. Because he trusted in the bank, he took all the money into a prominent local bank and prepared to deposit it into a 1-year fixed deposit. When the bank staff saw such a large sum of money, they immediately welcomed him into the VIP reception room. In the reception room, the bank manager recommended various financial products to him, but he only wanted to make a simple fixed deposit. Ultimately, the bank manager allowed Mr. Zhang to sign the paperwork to complete the transaction. He said you can withdraw the money after 1 year. This is the principal, and the interest will all be credited to your bank card. 1 year later, when Mr. Zhang returned to the bank to withdraw his deposit, he was met with a shocking discovery. His account, which should have had 570,000, only had 25,000 left. He immediately disbelieved and approached the bank staff to inquire about the situation. To his horror, he learned that the staff had secretly diverted his entire deposit into a fund, contrary to his instructions for a fixed-term deposit. The realization that he might be unable to recover his principal was overwhelming. Upon learning this, Mr. Zhang was consumed by a profound sense of injustice. He could not comprehend how his hard-earned money could disappear in such a dubious manner. He vehemently denied signing any agreement or document authorizing the fund's investment or giving the bank permission to use his money for any investment. However, the bank staff produced a copy of the transfer contract signed by Mr. Zhang, supposedly proving his consent to transfer his money to fund investment. Mr. Zhang was baffled. He explained that the staff had asked him to sign numerous documents during the debit process, but he had assumed they were routine banking procedures, not transfer contracts. The bank's response was unyielding. They claimed no fault and even threatened coercive measures if Mr. Zhang persisted. This only added to his frustration, leading him to file a direct complaint with the relevant authorities. The bank's refusal to acknowledge any wrongdoing and their threats towards Mr. Zhang further exacerbated the situation, highlighting the power dynamics at play. I would like to ask if the bank or the fund company should notify us when the time comes. Our role is to manage the funds, not to initiate contact with the bank's customers. Typically, the bank informs the customer about the maturity of their investment, or the customer can call us to inquire about it. Mr. Zhang went to the bank again, believing that he was doing business with the bank and that the bank should be responsible for the safety of his funds. However, the bank was substantial, insisting they were not at fault and even threatened to take coercive measures if Mr. Zhang continued arguing. During the dispute, the bank's security staff sprayed Mr. Zhang with pepper spray, a shocking lack of professionalism and accountability. This aggressive action escalated the situation and highlighted the bank's disregard of customer safety and satisfaction. This made Mr. Zhang even more furious, so he complained directly to the relevant departments. Another distressing incident has surfaced online. Ms. Han, a bank depositor, had just entrusted 400,000 yuan, equivalent to $55,000 to the bank. Shockingly, 100,000 yuan, equivalent to 14,000, was siphoned away within a mere hour. I deposited 400,000 yuan at about 3 o'clock in the afternoon, and then at about 4 o'clock, 100,000 yuan of the 400,000 yuan was transferred to a person named Wu Fei in 2 installments of 50,000 yuan, an industrial bank account. Seeing such an incredible phenomena, Ms. Han immediately rushed to the bank to ask for an explanation. However, the bank staff told Ms. Han that she had already had a China Merchants Bank savings card in her name, which she applied for in Shenzhen. But she has never been to Shenzhen, so how can she apply for a card? This response from the bank raises serious questions about their internal processes and security measures, which puzzles Ms. Han. According to the predictions by The Economist, the Chinese government will further accelerate its absorption and annexation of small banks. Such a consolidation of projects would take a decade to complete, according to estimates by rating agency S&P Global. But that's often not the case in China, where the push for mergers has doubled because they lack the mechanisms to allow banks to fail and exit the market. During the Lehman Brothers subprime mortgage crisis in 2008, the U.S. Congress took decisive action by passing the Financial Institutions Reform, Recovery, and Enforcement Act. This act allowed small loan companies to sell their assets and help resolve the crisis orderly. However, China does not have similar legislation. In June this year, a legislative draft called the Financial Stability Law was proposed at a legislative meeting in Beijing. Still, the draft was delayed again, highlighting the urgent need for legislative action. Since April, China's central bank has issued over a dozen warnings about the looming threat of bursting bond bubbles, which could destabilize financial markets and undermine China's uneven economic recovery. Small and medium-sized banks are particularly at risk from interest rate fluctuations. A rise in interest rates could lead to substantial losses and even bankruptcy for these banks. On the Chinese social media WeChat, someone commented on the news of the merger of 40 small banks in a week and said, "Is a storm coming?" Another financial self-media person said, "The Chinese bank market is accelerating to clear out. Banks have recently recruited professional debt collectors to collect bad loans, but small banks are busy disbanding. More than 30 banks are being merged and dissolved every month. The former may indicate that more and more people are not paying back the money, while the latter shows that the bank's bad debts are increasing."